Now, we talked about how to do the bank reconciliation. First you do the bank side, then you do the book side to come up with the same number on each side. After that, what you need to do is you need to journalize any transaction from the book side. You need to journalize any transactions from the book side. Why? Because we haven't recorded that information yet, which came from the bank statement. So anything under the book balance side of or under the book side of the reconciliation gets journalized. Anything under the book side of the reconciliation gets journalized. So you can do these as individual journal entries. So you would have 1, 2, 3, 4 journal entries to do, or you can do a combination of journal entries. So what I like to do is I like to credit the additions. I like to credit the additions and debit the subtractions. Okay, so up here we're going to add these items, and we add them with a credit. Okay, we're going to add these items with a credit. Boy. Okay, so if I'm crediting item 3 and item 4, what am I going to debit? I'm going to debit cash. Debit the cash, okay, for $130. And what am I going to credit? I'm going to credit accounts receivable because this comes from a customer. Okay, and I'm going to credit interest revenue because we earned that on our bank account. So debit the cash for $130. There's your debit. Okay, and then you're going to credit the account receivable, and then you're going to credit the interest revenue. Down the bottom, we are going to debit these items. Why? Because these are expenses. We're going to debit these items. DR. Okay. Service charges. I might debit a miscellaneous expense for the service charge of $20. Okay. And I might debit the water utility expense for $40. So I'll debit the expense, the miscellaneous service charge, I'll debit the water expense, and then I'll credit the cash because the cash is flowing out. Okay, so there's how you would journalize all items appearing under the book balance. Okay, and here's the formalized journal entries that we just discussed. Okay, they're doing them individually. Here's the receipt from the customer of $100, debit cash, credit accounts payable, receivable, excuse me. Here is the interest revenue being received, debit the cash, credit the interest revenue. Here is the miscellaneous bank service charge, debit the expense, credit the cash. Here's the utilities expense, debit the water utilities expense for $40 and credit the cash for $40. Okay. Online banking allows us to pay bills and view bank account activity electronically. It also allows us to prepare a bank reconciliation at any time, not just at the end of the month. What else can it do? It allows the company to reconcile the checkbook online, pay bills, set up automatic payments, promote a paperless approach, receive electronic notifications from the bank with regards to statements and or transactions, and as long as we've got the proper computer security, it's a secure online delivery system for us. Okay, so if we're looking at exercise 7-18, we're preparing a bank reconciliation. Now here we have Harrison's checkbook from exercise 7-18. These are basically the checks that Harrison wrote during the month of November. Okay, the first check that they wrote was $622. The last check they wrote was $627. There were 2 2 deposits made, one for 130 and then one for 1210. So that's what comes from Harrison's checkbook. On the bank statement, it showed that we had a beginning balance of 540. We made deposits of 130. Okay, here you'll see only 4 checks are displayed. Okay, we had on the previous one we had 6 checks displayed. So also you'll see that there's an asterisk here that check number 624 was processed for 115, but if you'll note here, 624 was processed for $75. So that means we wrote the check for the correct amount, but we recorded the incorrect amount here in our register. Okay, so they are going to ask us to perform a bank reconciliation. Let's start with the bank side first. We've got the balance from the bank statement. We're going to add the deposit in transit of 1210 because the 1210 does not appear on the bank statement, but it appears here in the check register. So that's why we have a deposit in transit of 1210. The outstanding checks were the two checks that were not on the bank statement, 626 for $85, 627 for $265. So if we subtract those items from the 1580 subtotal, we're going to come up with an adjusted bank balance at November 30th of 1230. Okay, hopefully that'll match to the book side of the reconciliation. On the book side of the reconciliation, we're going to start off with the unadjusted book balance that they gave us. They're going to start with the unadjusted book balance that they gave us of $13.25. Okay, then we're going to record the correction of the error. We didn't have enough with that $115 and the $75. The difference was $40, so we're going to add that back. The cost of checks, $35. I'm sorry, we're not going to add that back. We're going to subtract that correction of the book error, $40. My apologies. Okay, the cost of the checks, $35. We're going to subtract that, and then we're going to subtract the service charge. So, excuse me. So after those adjustments are made, our adjusted book balance will be $1230. So that's how you would prepare a bank reconciliation. Okay? So that brings us to the end of objective number 6.